It's 1:30 p.m. Time to give you updates from the world of business. You're welcome to Business Incorporated. Here's what we have for you on the program today. Well, Egypt's gas disruption has been recorded as the Hamas-Isreal war continues. And Uganda's shilling is stagnant after World Bank paused loan arrangement for the country. And then in Nigeria, German Chancellor's visit is still on. Trade talks, investment top the list of conversations, even as he meets with business communities. Good afternoon, I'm Ini John Mekwa. Let's head straight into the market. A pleasant one for Nigeria's market, as we see that it's doing really good. 1.12% at intraday. 67,890.19. Who knows if he's going to hit 68 at the close of trade or if it will go the other side. But that's what the intraday is looking for at NGX. South Africa follows, far behind, or on the flip side, 0.19%. Right there for Kenya. It closed Friday in the red, and Egypt is in the green, also 1.38%. At 23,404.38. Unfortunately for Kenya, we see keeps dropping. We had a long conversation on that on Friday, and we see that market keeps pulling back. Well, we're still looking at the market now. Middle East, it's positive sentiment. That's what we see in major markets right there. Abu Dhabi is up 0.53% at 9,285.37. Dubai follows suit 1.38% at 3,838.76. Moving to other regions now, it's still green. Saudi Arabia 1.09% and Qatar 1.70%. We see at intraday. Well, let's go to London now, where it seems higher for longer is really paying off for some group of the community right there, I guess, in the world, not just in the UK. Juliana joins us to tell us more about this. Hi, Juliana. Good afternoon. HSBC has recorded 240% in its profit. That's huge.
It is huge. Huge is one way of describing it, Inni, but you're absolutely right. Of course, when interest rates go up, it does benefit some sectors of society, and definitely here in the UK, it's been the banking sector. They've had an absolutely extraordinary third quarter update season, and today is the next big bank, Europe's largest bank by assets, which is HSBC. It is a UK-based bank, but certainly lots of its products and services are very much focused on Asia. And in fact, with their update today, they've completely pushed their biggest competitor to the side in Asia, which is Standard Chartered. They had their trading update last week. Sadly, they haven't done very well. But you're quite right in saying that there has been a 235% year-on-year jump. Even just saying that is extraordinary. So profits after tax for HSBC have come in at 6.26%. Revenues in the 3 months to the end of September have also risen by £7.71 billion. And this, of course, is all about interest rates. We have seen the Bank of England undertake its most aggressive tightening cycle in history over the past 18 months. Interest rates in this country have risen 0.1%. all the way to 5.25%. We do have an MPC BOE meeting on Thursday where we are expecting interest rates to rise yet again. So the fourth final golden quarter could also see similar results that we've seen over the past 3 months. One of the reasons why HSBC's bottom line has been so good is because of an impairment they set aside. They put aside $2.3 billion in the previous quarter to undergo some restructuring out of their French operations. That payment has since cleared, so they were able to add that back to the bottom line, which is why I think we're seeing some pretty extraordinary results from them.
All right, Juliana. So, well, it's not far away from what's going on in the market, I guess. How is the market taking these and the other macroeconomic factors?
The market is doing pretty well at intraday. In fact, HSBC, with their trading update to shareholders this morning, they also made some pretty strong comments, positive comments about the UK economy. Last week, during this programme, I was discussing some announcements and some forecasts made by Lloyds, where they said that they don't expect the UK housing market to recover to 2025. HSBC have refuted that statement. They actually think they're going to see growth in the housing sector next year. They also made some comments about UK GDP. They expect growth. They do not expect the UK to teeter on a recession. So that's all fed into the blue chip index at intraday, which is up 0.79%. The FTSE 100 up by 0.71%. And the FTSE 250, the domestic market, that's up by 0.93%. In the currencies market, the British pound is currently trading up against the US dollar by 0.71%, though the pound is down against the euro by 0.06%, but up against the Japanese yen at intraday by 0.19% in E.
All right, Juliana, thank you so much for that. Well, we'll move over now from the UK. We're going to Europe, where auto workers in the United States have been on strike for weeks now, simultaneously picketing all of the big three companies. But over the past few days, Ford and Stellantis-owned Chrysler have signed agreement with the Auto Workers Union, while General Motors hasn't. For more, let's talk to Lars Holter now, joins us to give us the details. Hi, Lars, good afternoon. So what else should we know about this?
Yeah, thanks for having me. Well, Ford was first to sign a deal with the auto workers past Wednesday already, and it didn't come cheap, that's for sure. The automakers paying workers a record 25% raise over a 4.5-year contract, but it allows the company to restart their profitable truck assembly lines. As for Chrysler, which is owned by Stellantis, they signed off on a 33% pay hike, starting with an initial increase of 11%. More importantly, though, the deal includes an agreement to reopen Stellantis' mid-sized truck assembly plant that had previously been shuttered. Stellantis will also keep open 2 facilities that were under threat of being closed. One is an engine manufacturing complex and the other one a machining operation. Altogether, the automaker committed $19 billion in new investments, and they promised to create 5,000 new jobs, where previously they had planned to cut 5,000 jobs.
All right, Lars. So how did they really get to this solution? How did they get the unions to hold back?
Well, both deals with Ford and Stellantis include higher retirement benefits. It's a key point for the union. But GM has more retirees than either Ford or Stellantis, and increases to pension benefits they cost GM a lot more than its rivals. So it really comes down simply to how much a deal would cost the company. However, the question, of course, remains how much will it cost GM not to sign a deal? The union says it will now include GM's plant in Spring Hill in the state of Tennessee in its strike, and that is a plant that supplies motors to 9 assembly plants that build several of the automaker's best-selling and most profitable vehicles, including trucks. To which the union's lawyer said, "Imagine everyone is making trucks but you." Well, GM obviously understands that very soon everyone will also sell trucks but them. Right now, the strike is set to cost General Motors $400 million a week. And since that cost could very well rise, management knows they will have to find a way to make a deal fast.
What about the markets? What are investors looking at?
The most important factor dominating markets worldwide is still the situation in the Middle East. Oil prices are down on Monday as Israel stepped up ground attacks on Hamas targets in Gaza, but held back from a full-on incursion. So many analyzing the situation there are hopeful that a wider conflict can still be avoided. Other than that, we're looking at a Fed policy meeting later this week. Some traders fear that the Fed will likely keep interest rates elevated for an extended period of time as inflation remains stubbornly high.
All right, Lars, thank you so much for that update. Moving to other regions now, Asia-Pacific markets started the week mixed ahead of key economic data from around the region. Monetary policy decisions from Japan and Malaysia, inflation data from South Korea, and gross domestic growth figures from Taiwan and Hong Kong are the region's highlights of the week. Looking at the numbers right behind me, right there, Nikkei 225 is in the red, almost 1%, 0.95%. Kospi is in the green, 0.34%. Our Hang Seng index is marginally up at 0.04%. If we see other countries right there, Shanghai is up 0.12%, and in Australia, it's a deep red right there, 0.79%. In the United States, stock futures rose on Monday as traders braced for a big week filled with Federal Reserve rates decision, jobs report, and Apple earnings. These are the major numbers expected to move the market this week. S&P 500 futures added 0.06%, while NASDAQ 100 futures gained 0.8%. Dow Jones Industrial Average futures were up 157 points, as about 0.5%. The S&P 500 fell into correction territory last week, shedding 2.5% for the week to put it down by 10.6% from its 2023 high. The benchmark is off 4% for October, on pace for its third straight negative month, which would be its first such streak since 2020 as the pandemic struck. The Federal Reserve decision looms on Wednesday, where the central bank is widely expected to hold its benchmark interest rate at the same level again, with a surging interest rate as the main culprit of the stock market correction. Investors will be hoping that the Fed signals it could be done raising rates, and traders expect the Fed to be done raising rates at least for 2023. Global oil prices now dipped even after Israel sent ground forces into the Gaza Strip, raising tension in the Middle East as investors closely monitor the U.S. Federal Reserve's monetary policy meeting, which is on later this week, precisely on Wednesday. Global benchmark Brent was down 1% to $89.60 a barrel. U.S. West Texas Intermediate crude futures last declined 1.1% to $84.61 a barrel. The Fed is expected to leave rates unchanged in the end of its two-day meeting on Wednesday after the U.S. economy grew faster than expected at a 4.9% annual pace in the third quarter. Israeli Prime Minister Benjamin Netanyahu said during a Saturday press conference that Israel has entered its second phase of the war in what he expects will be long and difficult as the country expands its ground operations in the Strip. Oil prices surged later Friday, with Brent jumping above $90 per barrel as Israel said its troops were increasing the ground operation in Gaza as it seeks to eradicate the militant group Hamas. We'll go to metals market now. Gold prices slipped from the key $2,000 level on Monday as investors positioned cautiously ahead of the U.S. Federal Reserve policy meeting, which is on Wednesday, while safe haven demand due to Middle East conflict provided a floor. Spot gold was down 0.8% at $1,993.71 per ounce. U.S. gold futures rose 0.3% to $2,003.50. Spot gold prices hit $2,009.29 an ounce on Friday, surpassing the key psychological $2,000 level for the first time since mid-May as investors piled into safe haven bullion. Palestinians in Gaza reported fierce air and artillery strikes early on Monday as Israeli troops backed by tanks pressed into the enclave with a ground assault market. Participants now look towards the U.S. Central Bank's policy decision, which is due on Wednesday, while the Fed is wildly expected to hold rates unchanged. The focus will be Chair Jerome Powell's comments. Let's take a break now. When we come back from there, we'll stay largely on the African continent and tell you what's happening there. To stay with us, this is Business Incorporated. Welcome back to watching Business Incorporated here on Channels Television. Well, the war between Israel and Hamas, obviously, the impact has spread to other countries. Egypt's natural gas import is ground to a halt in a development that reflects the impact of the Gaza conflict on the North African nation and could dash hopes of resumption of exports to Europe. The cabinet, explaining the reasons for the expansion of power cuts that have roiled the country for months, said that natural gas imports have fallen from 800 to 0 at a time when warmer than usual temperatures led to an increase in electricity demand. The halt in the gas imports appears linked to a decision earlier this month by Israeli authorities to shut down the offshore Tamar gas field amid concerns it could be impacted by fighting between its military and Hamas in the Gaza Strip. Chevron Corporation, which runs the gas field that Israel orders shut, as well as another major field that has stepped up production, could not immediately comment. The company had said on Friday that it continued to honor some of its contracts with Egypt. The latest announcement that imports have stopped will be watched by European gas traders. Egypt imports gas from Israel and then exports some of it to Europe as LNG. Italian oil giant Eni said last week that it expected Egypt to restart gas export as domestic demand drops. And from there, we'll go to Uganda, where the Bank of Uganda has informed Parliament that the Uganda shilling has remained stagnant since the World Bank announced a suspension of new loans to the country following the passing of the Anti-Homosexuality Act. This follows the pronouncement by the World Bank regarding new financing as a result of the Anti-Homosexuality Act that they wouldn't be funding any new loans in Uganda. That had an impact on the exchange rate. According to the Deputy Governor of the Bank of Uganda, the exchange rate depreciated about 3,650 to nearly 3,750 in a period of 2 days. Mr. Michael also said that the exchange rate has remained at that level since then, leading to pressures and uncertainties surrounding the currency due to the passing of the Anti-Homosexuality Act. In August of this year, the World Bank Group announced a pause in public financing to Uganda in response to that act. And from there to Nigeria, where it's an ongoing visit by Mr. Olaf Scholz, the German Chancellor. He's continuing that visit. Yesterday, he was in the presidency. And we see that he's currently meeting with members of the Nigeria-German chambers, where more conversations on investment opportunities between both countries are expected to hold. Before today, Mr. Olaf Scholz said that Germany is eyeing imports of natural gas from Nigeria in an effort to secure and diversify its energy supply. According to him, this will also have an impact on the global gas price. If more states offered gas on the global market, prices would decrease. Would bring you, of course, that meeting is having as we speak with the business community hosted by the Nigeria-German Chamber of Commerce. We'll bring that report to you subsequently here on Channels Television. For now, we're still staying in Nigeria, where the Treasury Bill Central Bank of Nigeria has offered 108.1 billion naira Treasury bills across the tenures of 91 days, 180 days, and 360 days. In an auction report released at the weekend, the West African analyst said that the CBN offered 108.1 billion worth of instruments across 3 tenures, 91 day, 182 days, and 364 days. Demand at the auction was strong as the bid to cover ratio stood at 3.7 times. Meanwhile, Nigeria's second sub-national alternative bond, Sukuk, is open for trading at the Nigeria Exchange as the NGX, as the Lagos State government completed the second issuance under the state's 1 trillion naira debt and hybrid instruments program. The Lagos State Infrastructure Sukuk SPV PLC, which is a special purpose vehicle of the Lagos State government, at the weekend listed 19.815 billion naira for at 14.675% series fixed return forward for that. Well, still in Nigeria this morning, Ladi Williams had a conversation on that intention by the federal government of Nigeria to securitize its dividend from NLNG. Let's try to understand some of those terms and the implication for the country.
If you look at the structure, from what I've read, the typical dividend that used to come from NLNG is something to the government is something in the region of $6 billion. But I understand that had fallen to something like $2 billion recently because of the drop in the production of oil and gas. And and that for me seems to be a conservative enough figure such that the borrowers can feel comfortable that enough revenue is going to come in the future to cover their principal and cover their interest. So they really do not have, I don't think they have too much to worry about, but of course you never know what happens in the future.
Well, from Nigeria, we head to South Africa, where the finance minister, Enoch Godongwaga, has painted a grim picture of the country's public finances ahead of his medium-term budget policy statement this week, delivering a key note address at the Foundation Annual Forum in Drakesburg. He said that the current government debt, which is due for payment, and high debt service cost could erode the government's available resources. Well, that's it on the program. Thank you so much for being a part of Business Incorporated. We do hope to have an episode tomorrow. I'm Ini John Mekwa. Enjoy the rest of your day.